Hi everyone, welcome to another video by Optionables. My name is Saket and today in this video we are going to look at what happened to the markets and what we can expect from the markets in the coming days. So today if we see the market, there was bloodbath since the beginning. The market itself gapped down close to 3%. The sell-off further intensified as we moved along the day. So it started with a gap down of close to 3% and it did try to recover, but later it almost ended at the lowest point of the day. That too especially post after 3 o'clock, Nifty as well as Bank Nifty each fell close to 1%. So if you look at the markets today, out of 50 stocks in Nifty, all 50 stocks ended in red. And overall, investors together lost close to 13 lakh crore worth of wealth. That means that much wealth was eroded out of the equity markets. Not just that, even the rupee was significantly down. So it was almost up by 1 rupee against the dollar. That means rupee depreciated by 1 rupee against the dollar. So the situation was completely worsened as Russia started to get deeper into Ukraine by attacking the forces of Ukraine. Even if you look at the overall market breadth, around 1,950 stocks which were actively traded in Nifty, hardly around 60 to 70 stocks actually ended in green. So remaining 1,800 and odd stocks today ended in red. This is the worst fall what the index has seen post the COVID crash. So that will bring us to the next question of what we can expect from the market in the coming days. So today if you look at the European markets, even they are down by close to 5%. So DAX is down by 5%, CAC is down by 4.5%, and even US futures is indicating a gap down of close to 2.5%. If you see Russian market especially, they were down by almost close to 50% during the day. So now it is down by 25%, but it was down by 50%. This is because so many Western countries, including US as well as UK, have imposed a lot of sanctions on Russia as well as Russian banks. So with these sanctions, what is going to happen is the entire financial industry is going to crumble in Russia. So these sanctions are mainly put on top 5 banks of Russia. And this is a pretty bad thing because when the entire financial system in the country crumbles, then it is going to be a pretty hard task for Russian economy to thrive. So not just that, even the access to finance is completely cut off from the Western side. So this will put Russia into a huge trouble given that war comes with a huge expense. As there is a famous quote which states that no party really wins in war because there will be loss of life, there will be economic losses, and even if you end up winning certain part of the land, it is not really a win because you have sacrificed way more resources than what you would have got. Right now also we are in a similar kind of situation where this war is going to end up in a place where nobody is really going to win. And looking at the situation right now, so Russia is now moving into the capital city of Ukraine. So they are closing in on the capital city of Ukraine. And definitely this is not going to be taken so lightly by the Western part. So they have made it clear that they are not going to attack Russia at any cost. So because Ukraine doesn't come under NATO. So none of the NATO countries are going to actually attack Russia, but they will assist or support Ukraine in defending against Russia. So the thing is, they are definitely going to impose a lot more of sanctions on Russia. So their idea is pretty clear. Even Boris Johnson, the Prime Minister of UK, has made it quite clear that their idea is to crumble the economy of Russia. So that will bring us to the next question, what we can expect from the Indian equity markets. Right now, the geopolitical situation across the world is horrible. So we don't know where this is going to go to. So now, not just this, even if you look at the oil prices, because Russia is the major supplier of oil to most of the European nations, the oil is expected to hit around $105 per barrel. So this is a very high rate, and maybe back in 2013-14 was the last time actually oil ended up crossing $100 per barrel. And not just that, this is a very bad news for crude dependent companies such as Asian Paints as well as Pidilite. So because their main raw material is oil, and when oil gets expensive, it is a pretty bad news for them. And like the Western countries think, it is not so easy to actually crumble the economy of Russia, because many countries depend on Russia for their imports, and it is going to affect other countries also indirectly quite a lot. So we should see how exactly this war is going to end, but that will bring us to the next question of what we can expect from the markets in the coming days. So right now, if you see today, Bank Nifty was down by almost 2000 points. Nifty was down by almost 800-900 points, and this is one of the worst falls what we have seen in the recent times. So given that what is happening in the market right now, the sentiment is extremely negative. So it is definitely going to be a sell on rise market. So whenever we see some bounce back happening, definitely there will be severe selling pressure. And FIIs who are already selling lakhs of crores in few months, so these situations will be used as a trigger point for them to sell more. So won't be surprised if FII's selling figure today crosses over 5,000 or 6,000 crores. But if coming to Indian equity markets, there is one good news, that the 50-50 margin rule has been now postponed to May. So it was supposed to come on February 28th. So that means from March 1st, we had to maintain 50% cash, 50% collateral. So now that has been pushed to May. So that is one good news for equity markets for India. So right now, looking at the market is extremely volatile, and it is also expected to be pretty volatile. So one thing I would definitely suggest avoiding is buying of options. So whether be it call options or put options, that is because today VIX was up 30% and it is trading close to 32. That means it is pricing in a lot of volatility. Even if you go to 32,000 puts in Bank Nifty, which is almost 10% down, so that is trading at a premium of 200 rupees, and this is extremely high, trust me. And I don't definitely see by next week. So I'm not even talking about the month end option. I'm talking about the next week option. I definitely don't expect Bank Nifty to fall to 32,000 by next maybe 4 or 5 days. So the premiums are very high, and buying options when the VIX is so high might not be the great thing to do. So people who bought options yesterday would have made fantastic money, given that the VIX actually went up close to 30%. Yesterday, people never really expected so much of volatility, but today they have got it, and today the options are actually pricing in the equal volatility what they saw today. In case if the markets do not remain volatile as it was today, then the option premiums are going to crash. So that's the reason, first thing what you have to avoid doing is buying of options, that too especially far out of money options, because the premiums are extremely high. So next thing is one thing what you have to avoid till the uncertainty actually settles down. So I don't think it's a great idea to go long on the market with especially futures. So let the market settle down, let the VIX slowly start coming down below 25. So then we can start going long in the market. Then what am I actually doing right now? So what I'm doing right now is buying good amount of equity stocks, because the prices are down by almost 12 to 13%. You're getting some great companies at very good rates. And what I would suggest is to put around 20% of whatever you intend to put or invest in the market right now. So if the market falls further tomorrow, then you can put another say 10 to 15 more percent. So this way you can start accumulating between the range of 15,000 to 16,200, whatever it is. So looking at the markets right now, again we can expect a gap down tomorrow. Even if you look at it now, SGX is suggesting a gap down of close to 120 to 150 points. So that means where can we actually expect the bottom? So as per my opinion, we should be looking at a bottom somewhere around 15,500 to 15,000 levels. So there is a reason to this. So whenever you see any event occurring, so be it COVID or anything of that sort, usually the market reacts way quicker than the actual effect of the particular thing. For example, even if you see during the COVID time, the markets actually made a bottom around March 2020. But the thing is, real problem of COVID started post that, because in March 2020 there were just very few cases of COVID and there was no real surge in COVID cases, and the government had put lockdown. But the real surge in COVID cases started around the time of May and June, when the lockdown started to get opened. So when the problem is at its peak, market would have made a bottom already well before that. So that's the reason if the market is falling and later let's say the situation gets little more worse, the market would have already priced that in. But one thing what markets wouldn't have priced in is right now the Western countries are saying that they won't take part in the war. Let's say even they start involving in the war, then the reaction is going to be much severe. So we don't know where the markets are headed, but looking at the current situation, we shouldn't be pretty far from the bottom. Maybe 15,000 to 15,500 should be a good bottom. So given that even if you look at the previous data, say 9/11 attack or any war-like situation, the markets for the next 3 months have usually turned positive. After the war crash, what we witness in the markets, generally for the next 3 months or 6 months, the markets have always turned positive. So given this news, we can expect the markets also to give some good positive returns in the next coming 6 months. So that's the reason you can start accumulating some good equity shares today. So as we had already discussed in the earlier videos as well, when there is a news flow, sentiments is what is going to rule the markets. Whether what support or what resistance, where is the OI, the data doesn't really matter. So it is all about the sentiments. So that's the reason doing technical analysis now or doing any kind of OI analysis now is not going to make any sense, because tomorrow let's say there is a positive news, the market is just going to rally. So it is not going to care for any technical levels. So that's the reason we have to be little dynamic in this market, and we don't know what really holds for the next few days. Market is something which will tell us what exactly can happen in few days. So coming to our trade finally, so what exactly happened to our trade? So today we booked a profit of close to 3.2 lakh. So we are not really proud of booking this profit. The reason is because if we had made good profit during a normal situation, we would be happy. But right now a war is going on and it is no reason to celebrate. So even if you actually look at it, so I would like to tell a story of what exactly happened today. So what we had done was we had done a simple short straddle and we had purchased some additional hedge legs. So we were quite happy. We had also put a filter and we had filtered out only the intraday positions. So the trade was going well and everything was happening. So we slowly and gradually started to make more and more profit. So meanwhile, what happened is, since I had put the intraday filter, I was not really monitoring what is happening to the regular positions. So in this time, what I have done is there was one particular short straddle order which has actually gone in regular instead of intraday. So I hit the order and I thought, okay, the order was not executed. So that's the reason I hit it again, but it had actually got executed in regular instead of intraday. So now I have put an intraday filter. That means I don't even know that position is actually existing. This naked short straddle costed us a fortune today. Since we had some extra hedge, we were able to manage the position today. Otherwise, since we hadn't realized that we had an additional leg, it would have been a complete disaster. So I had 2 times the additional hedge legs, which actually saved us today. So the thing is, this option which I had shorted around 130 and 130, the call became 0, but the put option became somewhere close to 800 rupees on 1000 quantity, where I ended up losing around 8 lakh from this leg alone. So it was a complete disaster. So I will tell you the incident, what exactly happened. So on the computer, I have put the intraday filter and I'm looking at the computer screen. The market is falling and I'm very happy because I have additional put legs purchased. And in my screen or in my computer screen, the M2M right now is showing 9 lakh. So I will just add a simple screenshot of that. It was showing an M2M of 9 lakh. And I was pretty happy. I actually ended up booking 9 lakh of profit until I actually ended up opening my phone, where I saw my M2M was just around 3 lakh. For a moment, I couldn't realize what was happening, because on my screen, I'm seeing an M2M of 9 lakh and on my phone, I have an M2M of 3 lakh. So for a second, I was like, did I lose in my positional trades? But my positional trades were also completely hedged and the risk was totally cut off. So this is when I started scrolling through what were the actual positions I had. So that's when I came across this 36,000 short straddle, from which I had lost close to 6 lakh. And unfortunately, a day where I could have ended with more than 10 lakh ended up becoming a 3 lakh day. But that's pretty good given the market situation, because in such a volatile market, any positive number is considered to be good. So with this, we also come to the end of this video, and I also hope that you guys have liked this video. If so, then don't forget to hit the like button, share this video, as well as subscribe to Optionables. Thank you so much for joining, guys.